Hello there and welcome. Are you new to technical analysis and were you curious about the Fibonacci series and its applications in technical analysis? Well, you've come to the right place. You see all those indicators in the blue box below? I've designed every single one of them and a whole lot more. So I'll show you an interesting twist on how to use the Fibonacci series and its applications of technical analysis. So let's get started. Just a quick detour to remind you that past performance is not necessarily indicative of future results. So the Fibonacci series was first discussed or popularized in the Western press, if you will, by Italian mathematician Leonardo Pisano Bugolo, who lived between 1170 and 1250, so a long time ago. His nickname was Fibonacci, which apparently means son of Bonacci. And this series or sequence was also described in Indian mathematical texts around 200 BC. So this is a really old idea. So the Fibonacci series or sequence is simply the sum of the two prior numbers with f0 equal to 0 and f1 equal to 1. So every sequence or series in mathematics needs a formula or an algorithm to compute the next term. So here we have fn, or the nth term, is simply the sum of n minus 1 and n minus 2. So the nth term is the total or the sum of the two previous terms. And then the series needs some starting conditions, and for the Fibonacci series they are that f0 is 0 and f1 is 1. So with these data, it's very easy to calculate all the terms in the Fibonacci series. So this is a table that shows you how we generate numbers in the series. So the first column is the term, so the fourth term or the fifth term. The second column is the formula, so we know that the second term is the sum of the first two terms, and the series starts by having f0 equal to 0 and f1 equal to 1. So the first term or the second term are 0 and 1, then f2 is 1 plus 0 equal to 1, then the next number is 1 plus 1 equal to 2, then the number after that is 2 plus 1 equal to 3, then 3 plus 2 equal to 5, and 5 plus 3 equal to 8, and so on. So that's how the series is constructed. So the nth number is simply the sum of the two previous numbers. So the way to visualize what the series represents is to think of squares made by the sum of the prior two numbers. So look at here, we got 1 and 1, they add to 2, so the next number essentially is a square of side of width 2, then 2 plus 1 is 3, so we have a square of width 3 units. The next number is 3 plus 2, 5, so we've essentially taken the width of these two sides and built a square. Then 5 plus 3 is 8, so that's a square of made up by the sum of the width of the two previous squares, and so on. And of course now you can also construct a spiral that would join these indices, and you would get something that looks like the inside of a shell. So one of the most interesting things about the Fibonacci series is that the numbers in the sequence have unique relationships or proportions to one another. So I'll show you over the next few slides what some of these unique relationships look like, and then I'll show you how we can use them in technical analysis. So on this particular chart, we're looking at the ratio of fn minus 1 divided by fn. So the ratio of the previous term divided by the current term. So for example, 1 divided by 2 is 0.5, and then 2 divided by 3 is 0.67, and 3 divided by 5 is 0.6, and so on. And you see this ratio stabilizes around 0.618. So fn minus 1 divided by fn equal to 0.618 is a ratio we'll use over and over again. On this slide, we'll look at the ratio of fn minus 2 divided by fn, and you see that ratio stabilizes at 0.381, and we'll use 0.382 as our reference. Now here we are looking at the reverse of the previous two slides. We're looking at the ratio of fn divided by fn minus 1. So 2 divided by 1 is 2, and then 3 divided by 2 is 1.5, and so on. And that ratio stabilizes to 1.618. So that's another ratio we'll use. And then if you take the ratio of fn divided by fn minus 2, you get a stabilization at 2.618. So 3 divided by 1 is 3, and then 5 divided by 2 is 2.5, and all the way down to 2.618. So this is another ratio we'll use. And then finally, if you take Fn divided by Fn minus 3, that stabilizes at 4.236, which is the same thing as 1.618 cubed. So 5 divided by 1 is 5, and then 8 divided by 2 is 4, and so on till you get 4.23. So again, a unique and interesting ratio. So this slide summarizes the key internal ratios from the Fibonacci series that we will use in technical analysis, either as a ratio or a percentage. They mean the same thing. So let me show you a few examples. So the Fibonacci price projections can be used on any time frame. We can use it to calculate resistance and support using retracements, that is between a high and a low, or extensions, i.e. going beyond the high or the low using the range that we have selected. And it's quite magical how these resistance levels and support levels attract prices. Is it random, or is it because traders are using these levels? Well, we don't know for sure, but let's keep going. So this is the chart of Apple where I show you some sample retracement calculations. So we picked the high and the low, which is the most recent high and at the start of the downtrend, and the range is 14.77 points or dollars. So half of that range would be, say, 7.4, and if you add that to the low, you get a number like 175.56, and that's exactly what the tool shows here. So when the market comes down and bounces, we expect it to find resistance around, say, the 50% retracement or the 61.8% retracement before the downtrend resumes. So again, since we know the range is 14.77, 61.8% of that range is 9.13, and if you add that to the low, you get 177.3, which is that value. So that's how you use the range in combination with the Fibonacci ratios to calculate a retracement. So we're using the Fibonacci ratios to find the proportion of the range, and we are subtracting that from the high or adding that to the low based on whether we want to find support or resistance. So this is still the Apple daily chart, and the ellipses show the high and the low that we're using for our reference, and the range between them is $14.77. So now if I want to project below the low, I can multiply 14.77 by 1.618 or by 100 or 2.618. So here I've multiplied that by 1.618 to get an extension value of 23.9. So if I take 168.17, which is that low, and subtract 23.9, I get an estimated value of 144.27, which is exactly what that value is. So that's how I've taken this range and extended it to find this target. And of course, if I extended it by 2.618, I would get 129.5. Now, it's interesting that the low that we had recently was in the range of this 261.8 extension. But of course, when we were here, there was no way to know that the prices would get all the way down there, nor did we know when we would get down there. So naturally, when it's only useful to have these extensions when we come down to these price levels, because then traders can look at that and try to guess whether there'd be some support at that level. But clearly, if you just look at these extensions, say the 100% extension, which would have put us in the range of 153.4, was close to this low, was close to that low, was in the range of that low, and then now met a little resistance here. So again, these extensions do have some relevance to traders, and it's good to know when you can do it and how you can do it. This is another example of a retracement on the Apple chart. So we got a bounce up and then a sell-off and then a little bounce here before the market made another low. And the range from this high to that low was 47 points, and 0.382 retracement amounts to 17.95 points, or adding that to the low of 132.61, we get 150.56, which is precisely this point. And this is where we found resistance. Of course, again, the problem is the same. The market could have come up here or here, and we don't really know why it stopped here instead of going there. But if you're a trader and you're in the news flow and you know that this could be a potential resistance, then you can try to take advantage of it. So that's an example of how retracements could be used in actual trading. So this is a different instrument. This is Bitcoin, or the BTC USD, i.e. Bitcoin price in US dollars. And again, I'm doing a range extension using the Fibonacci ratios. And we use the high and the low here on the Bitcoin chart, sort of similar to the Apple chart. And when I make the range extensions at 100%, 161.8%, and 261.8%, you see that this low was near the 100% extension. These lows were near the 161.8% extension. And then this whole consolidation range was in the range of the 261.8% extension. Now, two things. Obviously, when this low was formed, we didn't know how far prices would go. Obviously, as you approach these critical Fibonacci ratios, traders can try to assume that there might be some resistance or some support, as the case may be. And that's why the ratios seem to work. This is yet another example of both the Fibonacci range extension and the Fibonacci retracement. And I've used XLE weekly data. XLE is the Energy Select Sector Spider. And I've used weekly data to remind you that you can use this analogy or this analysis on any time frame. So in this case, we've used the range between these two extremes formed in late 2020 and make a projection out to 200% and 161.8%. And you see that the high was somewhere in this range. So again, we didn't know how long it would take to get here and even whether it would get here. But once it gets into this range, traders start trying to process these resistance areas and other external information to see whether they can go against the market. The blue lines are an example of a retracement analysis. That is, we've used the high, the low, and the high of this range, and we're just looking at significant retracement levels like 38.2% retracement of the move, 50% of the retracement, or 61.8% of the retracement. So again, the market seems to have found support around these regions like we should expect, and perhaps it'll come back up to form another high exactly where we don't know. But again, it's just an example of how the Fibonacci series works. So this is a chart of the US Treasury 10-year note futures, just to show you how it might work on a different instrument. And once again, we have a range extension. I've picked two key turning points which seem pretty obvious on the chart. We had a big move going into this high and a very strong rebound of this low, so it's natural to look at these. And when I project that range out, 38%, 100%, and 161.8%, what do you see? You see some support in this area, then again resistance in this area, and support in this area. So that's an example of how the extension of Fibonacci ratios can be used to predict ahead of time potential regions of resistance and support. So this is a very long-term chart of the monthly 10-year T-note futures data. And what I want to show you here was that we have the Fibonacci extensions on the right-hand side, and we've marked support and resistance based on action many years ago. And you can see that from time to time, the Fibonacci projections often coincide with some support and resistance on the charts. And that's a way that you can get more value out of the Fibonacci projections or retracements by looking at a long-term chart and trying to see whether the Fibonacci extension levels are coinciding with other regions of support or resistance that you would ordinarily mark on a chart without using Fibonacci retracements, but by looking at significant points of support or resistance. Well, thank you for staying all the way through the end of the slide deck. Just a reminder that I have a package of tools for Metastock called Tushar Chande's Complete Toolkit. They're easy to learn, simple to use, and very, very powerful. The systems are very clear. You can use them on any time frame from monthly to intraday, and you can use them anywhere, that is any type of instrument or exchange. So until I see you again, you can check out my blog at chandeindicators.substack.com. Thank you again and have a great day. Bye.